Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Various head of states have been meeting with President Trump to negotiate the tariff stance. India is no different, and our Prime Minister has met with President Trump, especially at the time concerns are building up on the high tariffs India places on American goods. Now, on the data front, the US PPI was another hot number, but the market reaction was rather muted. Good morning, JK. What are your takeaways from the meeting of our Prime Minister with the President Trump?
Good morning, Swaraj. I think most most of the points that were covered in the meeting and also the negotiations were hinted at by various media already. They've been like India agrees to buy more, natural gas and other fuel from US, and then there's also a defense deal that is going to happen, and their cooperation on terrorism and all that, and for towards peace also. India also gets involved in the broking for Ukraine war ending. Such things not too big, but Trump did not mince words when he said that India has one of the highest tariffs on India on the US exports, and on the Indian side they've already reduced some, and I think there's no major surprises from the talks that the two leaders had. Of course, if there were anything that did not come on the headlines, that will be known in due course. So no major takeaway from these Trump meeting with Modi as of now. On the economic front, as you said, the US PPI inflation was hotter, and definitely, just like CPI, all the headline numbers came stronger. And what surprised me was that the yields have actually fallen after the PPI number. In fact, they were falling during the day also. And some details also show that some of the costs related to the which go into the PPI calculation, like healthcare, and then core, the domestic airfares, and also some brokerage services. Some of these services related activities, inflation is actually coming off, and they could actually reflect in a lower number going forward. As I said, market always is also discounting what's coming ahead rather than what's already there, and so that's the reason. And also possible that the oil price the last month contributed to a bigger increase in the headline PPI. So market slightly ignored that fact as well. Possible, one more thing, let's not forget that Powell also had said that we have to look more looking at the PCE inflation that is likely to come in the end of the month. Therefore, it will not be very important to look at other numbers at their face value. So we will wait for the end of the month number, and no doubt market also seeing how the tariff goes into play, because the tariffs eventually are further postponed, then the impact of that will not be much on the inflation. So I think inflation number is still evolving. There are also indications that the government expenditures will be cut a lot. Yesterday there was a news that the Department of Government Efficiency has opened a website where they will be regularly posting what expenditures are being cut, and they have a target of cutting 2 trillion from the expenditure. So the market is not really merely looking at the headline inflation numbers, but looking at various other things like Trump, like tariff, and the expenditure part, and deficits to arrive at the direction for the yields. And don't forget that the US government, or rather Mr. Trump, has already asked for the yields to be lower, or long-term yields to be lower, which was voiced by the Treasury Secretary. So these are the things. So hence we saw even the dollar reacting lower after the headline number was announced. And course, we also had some good news from UK economy yesterday. GDP number was better than expected for quarter 4, and overall for the year also it was better expected. Industrial production was also better, but on the eurozone side, the industrial production was much lower than expected. Now, these economic numbers have actually been overshadowed by the stream of news that we are getting on the Trump administration's decisions. And we should remember that whatever, one disclaimer is that whatever we say, it actually in the next 1 hour or in a few hours, things also change. So there's a lot of talk about the reciprocal tariffs being immediately imposed, and then subsequently, what we have seen is that Trump has signed an executive order on the reciprocal tariffs, but it is a direction for the Trade Department to examine in detail how these are working with each country. And actually, there is a report that is expected to be submitted to the president, and the eventual decision will be taken only on April 1. And I see this just like the tariffs on Mexico and Canada eventually, which was postponed to March, effective from March, was something like again a negotiating tool. So market is now very much convinced that these are actually being used as a tool to negotiate a lot, and there is also a sense emerging that currency could be one of the aspects of these negotiations, in the sense that if a country wants to avoid higher tariffs, then they will have to let their currency appreciate, or the dollar to fall against those currencies, particularly in countries where there is a huge trade surplus like China and Europe. And this is something that will actually help reduce the trade deficit more sustainably. Indications that we are getting. And if you look at the currency market moves also in the last 24 hours, dollar seems to be finding a lot of resistance on the higher side. We have actually broken good support at 107. And on the technical part also, on the monthly chart, we are seeing last month doji formation, which is just to explain that a doji is a undecided state of the market, where the market can, after a trendy move, can go either way. So the prices this month have come below the low of last month's low. So it does look as if we are heading lower in the dollar index at least. And when it is coming off, dollar is coming off without any great news from other economies, while US economy continues to do well, gives us a feeling that this is more driven by a policy intervention or a negotiation, rather than due to any economic reasons. So I think we are probably, at least for the time being, the top for the dollar is on the dollar index at 110.50 that we have seen recently, and we are seeing possibly technically also looking at some downside, for more downside for the dollar. And of course, depends on how the negotiations, etc., go on. Understanding on the currency goes on. We will see the directions evolve. And let's also remember that unlike other points of negotiation, the dollar will not be so openly discussed by the policymakers, and it normally is left to the market to determine, just by going by the other policy directions. Now, how does this impact the USD-INR? Now, in USD-INR, we have seen huge selling from RBI since the time it touched 87.95. 2 consecutive days of large selling by the central bank brought it down to as low as 86.34. And in fact, if you look at the technically, weekly candle is a very bearish candle as far as the USD-INR is concerned. And it has also caught a lot of longs on the wrong foot, and led to stop losses being taken. And I was, after the bounce from 86.40 yesterday, it has not been able to revisit 87 also in the onshore trade. So it appears that dollar index is guiding the dollar rupee also eventually in the same direction. So I think that possibly sensing that the dollar index is also topping, RBI might have been emboldened to sell more dollars, although they've already lost a lot of reserves. So this could be one hint that the USD-INR also might be at least seen top for the time being. I wouldn't say for a historically depreciating currency a big top, but at least a medium term or the near term top could be in. But it's too early to say because news flow is so thick and fast that we have to keep assessing this factor. So overall, my sense is that for the time being, dollar remains soft.
Thank you, Jackie. And just a quick question to you. You mentioned that we discussed about the dollar index, especially it traded softer after the PPI print. And for the rupee also, you mentioned that, we are not able to exceed 86.90. So what should be the strategy for our importers and exporters? What do you think would be the ideal levels?
I think if you look at the overall market positioning, importers have been hedging for quite some time now because the trend was very clear, uptrend was very clear. So every dip or even on a higher break of higher resistance, also importers have been hedging and exporters have been somewhat sidelined. I think the recent moves and indications of the dollar index trend and even the dollar yuan coming below 7.28. Interestingly, dollar yuan offshore is now trading below the dollar yuan onshore. It's very rare that it happens, which means that markets, the speculative positions are getting actually unwound there also. So keeping these in mind, I think USD-INR pressure is probably more on the downside, or I would say at least the top is in. So when you have a currency which has a high premium, high carry, whose top is probably getting defined, in that case, exporters have to be more active. They should use the rallies above 87 if you get it, definitely to sell and receive the premium also. For importers, I would say now not to go beyond 1 month. Because we have this is a period in which we will observe how things evolve on the tariffs and other policies. So any dip towards 86.30 one can use for very near term hedging in the import, and then we'll see if 87.20 breaks eventually once again, that is when we can reassess for the importers.
Okay, thank you, JK, for that strategy. For the India-US meet, just what JK covered, India will buy more energy from the US. Defense deals with India will also has also been discussed, and Trump did mention India has one of the highest tariffs towards US exports. On the data front, US PPI was hotter. Surprisingly, yields have fallen after this print, but some services sector also show some fall in inflation, especially the healthcare. Oil prices also contributed to this increase in PPI number. But markets overall remained focused on tariffs. The reciprocal tariffs by the US has been deferred for the time being. The call would be taken around April 1st. That's it from us today. Thanks for listening. Have a very good weekend. We'll catch up with you next week with a fresh round of updates.